There are many ways to extract a profit from company. It may be salary, bonus, dividends, or taking a loan from company. However, each method has its own tax implications for company as well as for individual. Tax planning is maximizing a profit by minimizing a tax liability. In this video, I will explain 7 methods which will help in tax planning under company. However, the best combination of methods will depend on individual circumstances. A quick disclaimer. I'm a qualified accountant, I'm a qualified investment banker, and by profession I'm working as an accountant in accountancy firm since April 2019. However, I'm not your accountant, I'm not your financial planner, I'm not your tax advisor. So in order to get a best advice, you have to consult your accountant, your financial advisor, and your tax planner. And figures and tax rates I have used in this video are as per UK tax. There are 7 options under company that can be used to reduce your tax liability. Number 1, optimal remuneration package. Number 2, dividends. Number 3, pension contribution. Number 4, charging a rent. Number 5, mileage. Number 6, capital allowances. And number 7, research and development. Number 1, optimal remuneration package. When it comes to remuneration package, you don't have to only look into monetary value or salary. However, there are many other factors that you have to consider. I will explain 8 factors that will help you to design an optimal remuneration package. Number 1, salary. Number 2, work from home. Number 3, work-related training and courses. Number 4, workplace canteen. Number 5, staff entertainment. Number 6, outplacement counselling. Number 7, car parking. And number 8, childcare vouchers. In UK, 758 per month is a salary that will help you to eligible for the state pension without paying any national insurance contribution and any additional PAYE. HMRC allows you to work from home, which is either you can calculate by yourself or as per the HMRC provided rate, which is 312 per annum. There are many courses and many training provided by the employer, which is deductible for employer, but you don't have to pay any taxes as an employee on that, not even PAYE, not even national insurance contribution. Many employers provide workplace canteens from where employees get discounted meals. As per HMRC guidance, 150 is allowable expense as an staff entertainment. Employers are eligible to deduct that cost from their income to reduce the profits. So this cost can be used against parties, against any kind of entertainment which is allowed or open to all employees. Many employers provide outplacement counseling or mentorships from where employees can get a benefit such as mental health or such as some physical health or any kind of mentorship. London is overcrowded with cars and vans, and if your employer is willing to provide you a car spaces or car parking, this is one of the best factor in your remuneration package. For working parents, any additional income will be a good source to improve the lifestyles and their children's lifestyles. So some employers provide 50-60 pound or even 100 pound childcare vouchers for working parents. All of these options are tax-free, which means you don't have to pay any national insurance contribution, you don't have to pay any PAYE. You can optimize or you can design your remuneration package with these options and get the optimal remuneration package for yourself. Number 2, dividends. For the tax year 23-24, dividend allowance is £1,000, and any dividends above the £1,000 you have to pay the taxes. Basic rate 8.75%, higher rate 33.75%, and additional rate 39.75%. And I will paste a link either in description or you can see up somewhere here where I explain how to pay less taxes legally here in the UK, in which I explain how the basic rate work, how the personal allowance work. You will understand more while watching that video. Number 3, pension contribution. Employer pension contribution is the best source to reduce your tax bill, and this is the best source towards your pensions. And if you are contribution, let's say 5,000, 6,000 pounds in a pension pot, obviously it reduces your tax bill from the company side, but it's also help you to increase your pension pot. For 23-24 tax year, the pension allowance is 60,000, which means you can contribute up to 60,000 without charging any additional charge. Number 4, charging a rent. There are many small business owners who use their homes or rooms as a working office. So for that one, if you are charging a rent from your company, then that rent is tax allowable expense, which means your tax bill will be reduced while deducting that rent from your income. Number 5, mileage. For small companies or private limited companies such as 1 director company, 2 director company, or even 2 partners partnership, 3 partners partnership, or even a sole trader, it is very highly unlikely to approve the lease and hire purchase from financial companies because of their earnings, profits and revenues and the covenant attached to the lease agreement. So in that case, these directors, partners and the sole traders, they are more likely to use their own cars. In that case, as per the HMRC guidance, these are allowed to claim 45p up till 10,000 miles travel for the business purpose, and any mile over the 10,000 limit, they can claim 25p for each mile travel for the business purpose, which is a big chunk to reduce their corporation tax or their partner tax liability or their sole trader liabilities. Number 6, capital allowances. There are 3 types of capital allowances: annual investment allowance, first year investment allowance, and return allowance. So under each category, you are allowed to deduct a portion of your capital addition as an capital allowance, which help you to reduce your taxation liability. Number 7, research and development or R&D. R&D is mainly provided to IT sector or for pharmaceutical industry. And let's say you are in IT sector and you are developing some software. Any cost related to developing that software will be eligible for R&D claim. Let's say you are paying wages and salaries to your staff to develop a software, that is allowable expense. Any rates including water, electricity and gas bills, any subcontractor costs, all of these are allowable expense to claim a R&D from HMRC. Even if you are buying any additional softwares, any training courses or any books or any relevant material to develop that software, which is allowable expense for R&D purposes. 7 options under company that can be used to reduce your tax liability. Number 1, optimal remuneration package. Number 2, dividends. Number 3, pension contribution. Number 4, charging a rent. Number 5, mileage. Number 6, capital allowances. And number 7, research and development. As always, hands ahead, salute until the next video.